Hey everyone, I'm Evan and welcome to Finpod, your aftermarket recap. Your essential daily financial digest, airing both before the market opens and after it closes. Finpod is brought to you by Fintwit.ai, a leading platform for real-time trading signals from X and AI-powered stock analysis. Let's break down what happened today. We're kicking things off with what was trending on X, the stocks that had financial analysts buzzing. Today, the conversation was largely dominated by some significant downward moves in big tech. Meta, for instance, saw its shares drop about 4%. CrowdStrike Holdings also experienced a notable decline, down nearly 6%, while Robinhood Markets fell over 6%. Even the search giant, Google, was trending lower, shedding over 2% each. It was a tough day for some of these market darlings, and the chatter on X reflected that concern. Now, let's zoom out and recap the broader market action. It was a rough day across the board, marking the fifth consecutive weekly decline for the major indexes. The S&P 500 tumbled about 1.7%, closing around 63.67. The Nasdaq Composite, heavily weighted with tech, took an even bigger hit, sinking around 2.1% to roughly 20,949. The Dow Jones Industrial Average wasn't spared either, falling about 1.7% to close in the 45,150 to 45,160 range. Even the small-cap Russell 2000, which had shown some resilience earlier, ended the day down about 1.7%. What drove this widespread selling? Well, a couple of factors were at play. We saw continued weakness in mega-cap stocks, particularly in the chip and AI sectors, which dragged down the broader market. There's also the persistent cloud of the month-long Middle East war, which continues to suppress risk appetite. Crude oil prices rose again today, fueling concerns about global inflation. Adding to the cautious sentiment, U.S. consumer sentiment eased this month. The Nasdaq, for its part, officially confirmed it was in correction territory this week, a 10% drop from its prior high. Moving to the rapidly evolving AI economy, we had some interesting developments today. In a significant legal move, a federal judge temporarily blocked the Pentagon from labeling the artificial intelligence company Anthropic as a supply chain risk. This stems from a dispute where Anthropic has been trying to prevent its AI technology from being used in fully autonomous weapons or for surveillance. Ironically, concerns about Anthropic's AI model, specifically its Claude Capybara, also led to a downturn in cybersecurity stocks today, following a report that the model could pose unprecedented cybersecurity risks. On the regulatory front, there's a new bill on the table from some lawmakers proposing a universal halt to America's AI economy. This would include a moratorium on new data center growth and a ban on exporting AI chips until a comprehensive regulatory framework is established. We're also seeing reports emerge that the explosive growth of AI is starting to sabotage big tech's climate goals. Shifting our focus to individual stocks that made big moves outside of the trending tech names, we saw some significant action. On the upside, System 1 surged over 74% today, though without a clear catalyst. Next Technology also had a strong day, climbing nearly 40%. Argan soared over 35% after reporting earnings that beat analyst estimates, and Energy advanced more than 7%, reportedly boosted by a new data center deal with Meta. Even ExxonMobil saw a rise of over 3% in today's tough market. On the flip side, Burford Capital led the decliners, plunging over 36%, also without a specific news driver. Fundrise Innovation Fund was down significantly, losing nearly 36%. Zena's Biopharma also saw a steep drop of over 20% following announcements of convertible notes and stock offerings. In earnings news today, we had a couple of big reports to digest. Carnival Corporation announced its first quarter results before the market opened. The cruise giant reported adjusted earnings of 20 cents per share, beating estimates of 18 cents. Revenue also came in higher than expected at $6.2 billion, surpassing the $6.14 billion estimate. Despite beating both top and bottom lines, Carnival's stock fell around 4% today. The market seemed to be reacting to their updated full-year guidance, which, while raising their operational outlook by $150 million, also anticipates a $500 million headwind from higher fuel prices, leading to a revised lower full-year adjusted earnings per share projection. On a more positive note, Legence Corporation, an engineering and maintenance company, reported its fourth quarter results for 2025. While they did report an adjusted loss of 1 cent per share, missing estimates, their revenue surged to $737.6 million, significantly beating the $620 million forecast. This strong revenue growth, up 35% year over year, was largely driven by surging demand from data center and technology clients. The market reacted very favorably, with Legence's stock closing up over 3% today, after surging over 12% in pre-market trading. They also raised their full-year 2026 revenue guidance, reflecting confidence in continued momentum from AI infrastructure buildouts. That wraps up our look at today's market action. We covered the trending tickers on X, the broad market slump driven by macro concerns and tech weakness, the latest in the AI economy with Anthropic's legal battle and new regulatory proposals, and individual stock movers like Argan and Legence. For detailed analysis and AI-powered stock insights, be sure to visit fintwit.ai. Until next time, I'm Evan. Stay informed, stay ahead.